I cannot wait. All right, if you need to crack open the Maylocks every time you look at your most recent 401k statement, then this segment is for you. Jeff Reeves, editor at InvestorPlace.com and MarketWatch columnist, is with us. Now, Jeff, can the buy and hold strategy still work in this marketplace?
Well, I think it can. Your last contributor was just talking about kind of volatility in the market right now.
Yeah.
While I'm not going to pretend like there's not market volatility, I think that people can use that to your advantage. You maybe buy on a dip. If you have a long horizon in stocks, and let's face it, most of us do, unless you're a day trader, I think it really is in your best interest to kind of look for a pullback, get in, and look, years down the road. It's better for your blood pressure if you don't just sit there, click and refresh on your quotes hour by hour. Unless you're a day trader, this is your profession. Those people, they're just different animals than the rest of us. I think there's nothing wrong with having a buy and hold a couple year horizon on stocks instead of a couple days.
Jeff, even though, let's just take a couple month horizon here. We fell off a cliff at the end of July, and since then we've had a lot of volatility, but we've been oscillating in between a range of about 800 points on the Dow. So is that enough of a pullback if we get to the lower end of that range to where you say, look, buy some of these high quality names?
Yeah, and again, we'll talk about some stock picks in a minute, but I do think that if you get a stock that pays dividends, you kind of have an automatic hedge against the market volatility. You get some built-in returns from that. And I do think, not to rain on everybody's parade today, I think it's great to have some people hugging it out in Greece over the debt. But, the fundamental problem is I think that we see a little bit too much exuberance yesterday and today. I think we might see another pullback in store, but that's where if you're a buy and hold investor, you wait for a pullback. I'm thinking, S&P 1100 or something. You can get into a stock for the long term at a decent price with a decent dividend, and I think it'll serve you a couple years down the road.
And there are some, secular growth stories here. I think that's probably what Charlie was looking for earlier, secular. ExxonMobil and MasterCard, those aren't going away, and they're in businesses that certainly look like they'll be around here over the next couple of decades for sure. But one that you like that I thought was interesting was Senior Housing Properties Trust, SNH, and that's a REIT. Tell me about that one.
Yeah, I kind of threw that one in there because it's a little bit under the radar for folks, but something everyone should be able to admit is that the baby boom is a demographic shift that cannot be ignored. By 2030, we're going to have 20% of our population 65 or older. It's going to be one of the biggest macroeconomic factors affecting everything. I mean, that's fundamentally why the government's doing what it's doing now with entitlements and spending, is because we have this wave of old folks. So, Senior Housing Properties Trust is a REIT. It's a real estate investment trust, which means that by law it needs to deliver 90% of its taxable income back to investors. That means big dividends. Right now it's currently a 6.5% yield. So, I do think there's share appreciation in this company's future just because the demographic trends is growing. It added another 9 properties for a big $300 million buyout this month, which is a big chunk of change for a company with only a $5 billion market cap. But it's paid dividends consistently since 1999. It's got a 6.5% yield. Even if you do see some volatility in the market, I mean, folks like you and me, I think we'd be pretty happy with a 6.5% return on our investment, even if shares flatline.
Yeah, even if they lose a little bit of value, you'd still